around half of the blue chip artwork that's being circulated in the private market are fake. You know that there's a free port and warehouses to keep their valuable art all over the world. Billions of money is being locked up, and most of the assets in the world are able to be financed, but not art.
Today, I'm thrilled to be joined by Grace Lau. She's the founder and CEO at Artwise, a new blockchain platform that uses art as collateral.
Thank you so much for having me, Tracy. This is really nice.
So, in your own words, what is Artwise?
Art-wise, so I come from an art background. I work in art for more than a decade. I'm not an artist. That's a very common misunderstanding when I tell people I work in art. I work on the buy and sell side, which is I'm in private dealing, private sell, collection management for the ultra high net worth who are in need of allocating their wealth to art as part of their wealth allocation, I would say. And not all of them are there for the investment or the monetary value, but most of the time it comes along with their purpose of collecting. And so, by that, my word for Artwise, or my vision, I would say, for Artwise is we are sort of in a recession of the economy right now. And a lot of our clients are asset rich but cash poor. A lot of wealth is being locked up in their art collection. If you know that there's a free port and warehouses to keep their valuable art all over the world, like Switzerland, Hong Kong, Singapore, even somewhere in China, like Shanghai, it's a lot of billions of money is being locked up. And it's really bizarre that because most of the assets in the world are able to be financed, like your property, your other valuable asset, even cars are being financed, but not art. I mean, not properly being financed. With the rise of blockchain, and we do realize there's a gap and there's a need for people to be able to have that access to the financing solution, and so we are here to work on it.
I really love that you start with the macroeconomic context around why this is so important now at this moment in order to use your art to be more than just a aspect of your wealth that's just sitting in your house, working with people who are using that art that they're going to have for decades and decades to finance other types of investments to create some liquidity. Is that right? How would that have happened traditionally without blockchain?
For industry specific startups like us, we are not focusing on developing the tech because that just doesn't make sense, right? We have to focus on what we're good at, which is the art as a specialist. So typically they would go to private banks, iBanks, not just any commercial bank that down the street, and then they would acquire for financing solutions. And these departments that belongs to the iBanks and private banks are usually handling financing solutions along with other collectibles like property, private jet, yacht, and stuff like that, the stuff that people owns. They are not specialized in art, so for them it's very difficult to actually deploy the whole procedure. It requires special people to understand the value of it, to give valuation to it, and then to make sure it's not fake, it's not forged. On the side note that around half of the blue chip artwork that's being circulated in the private market are fake.
So you talked about how art can be used as a financial product, can be leveraged. Let's bring blockchain into the picture.
So first of all, like because we mentioned about how is it differently done before and after the blockchain, right? I think I'll break down into two parts. When it comes to operation and execution, it's the art part and the liquidity part, which is the lending part, right? That's usually how lending and loan works. So for the art side, we are not very much different from how traditionally it's going to happen. We have to go through all the procedures like authentication, valuation and condition report, all that necessary steps that when it comes to loan to an art or even private sale procedure, that cannot be skipped. If someone tell you they can just look at the picture and do something with your art, that's a scam. And then, so when it comes to liquidity side, that's where the difference step in. So traditionally, if you go to, we just mentioned, you have to go to the banks, right? iBanks for, and right now you can go to some of the auction houses. They provide loan financing solution for your artwork as well. Their condition is quite high. Like you have to meet their condition that they ask for, like the price range, the condition, and where the art is coming from. Like some of the provider, they expect that your artwork was being auctioned at their auction house to be able to loan to you. And that really narrows down, the range of the artwork that can be financed.
Right.
So when it comes to liquidity, you go to these institutions and they would make assessment on the individual pieces or a basket of pieces that they're looking at. They would source the lender and see whoever that is interested in lending against this particular basket or piece of art. That is extremely inefficient. It's almost like a private deal sourcing, but instead of selling the piece of art, they are turning this as a loan option to the lender. And so for the lenders, they have to be highly educated and at least they have to hold certain level of knowledge to understand if this artwork is worth something, right? Of course, there will be paperwork being inspected, third party looking at the value of the art. But in the end of the day, it's not efficient. So oftentimes, it's either the LTV is low because they don't want to bear the risk. They want to mitigate as much of the risk as possible, and or either the interest rate is unreasonably high. We want to maximize that speciality, and we basically create our own liquidity pool with our own investors. It's almost like a treasury that we are managing the treasury and we will decide on
Ooh.
which artwork and art collection that we will be bringing on board. And once the artwork or collection is being on board and tokenized, the art owner, the asset owners can have access to the liquidity pool, which is the lending pool, anytime they want. Like they just have to swap it.
Oh, that sounds much more efficient and also quick. What do people usually finance with art?
Traditionally, when the solution is not that efficient, it takes months. Some, like private institute, might shorten the procedure to as short as like 3 weeks. But then once the long term starts, it's never a short term loan. It's at least like a year on, 2 years. I would say back then, asset owner would finance that for their personal use or to invest in something else that they think the return will cover the whatever interest rate they're paying for getting that loan, right? But for us, we have developed because we already have the liquidity pool there and we already have the asset being tokenized. So it's more of a flexible thing. If they want to have 1 month loan for just, cash, sometimes you're short on liquidity, you have bill payments, and you can do that with this finance. And sometimes you need 3 months, and sometimes 6 months. So we have that option as well. So that also differentiate from traditional art financing.
Right.
Yeah.
And we have to hear about the risk because risking your
Yeah.
art that has a monetary value assigned to it, it feels a lot more risky than something else with the same exact monetary value just because of the worth. So much of the value of art is in the beholder, right? They're considered treasures. What happens if somebody defaults?
In case of default, first we'll try to chase and do whatever we can in our power to not let that happen. But if unfortunately that really happened, we'll have to enter the liquidation process because we'll have to make sure the lender's money is not, we have to protect the lenders as well, right?
What are the other benefits of blockchain and decentralized finance when it comes to the art market?
As an owner side, I think that's quite obvious. We are working on the solution to serve the collector mainly. For the lender side, which is the investor side, we have been talking to a lot of private investment firms like wealth management. I mean, I'm from Hong Kong, and in Hong Kong, we have a lot of family offices and wealth management firms and even private credit. A lot of them are managing wealth for one family or a few families, and those families are owners interested in art because I think it's natural that when your wealth get to a certain level, yeah, you're interested. You will be interested in art. So the family office's CEO or director are usually exposed to art as well. They have certain level of interest in allocating part of their money to art, but they, as I said, like, just like the private banks, they don't know how to get involved. They're often being invited to like auctions, art galleries, but they don't know how to define which of the art can be financial product. Some of them they test the water and they bought some art pieces doesn't really worth anything, unfortunately. So when we talk about the solution with them, they are very intrigued because we are offering them basically a range of return that is for sure. And because it's a loan, right? So we're collecting interest rate from the asset owner. So we offer that yield for sure. They are very excited. They're like, wow, I didn't know I can invest in art like this. So yeah, I think that's how blockchain and how our solution is up leveling this whole thing.